system. And for those of you that are wanting to learn more about cryptocurrency, I think that you'll find that this is going to be very informative and educational, even if you're just kind of sitting on the sidelines and you're watching and you're trying to understand a little bit more about, cryptocurrency as a whole and really what makes us unique and what makes us different. So I think we're going to start there. And then I'm going to talk a little bit about the drip license. Got some exciting news about the drip license. And then finally, we're going to finish up with why short-term holders and ultimately even dips help the long-term holders when it comes to potential upside. So let's get right into it. So first and foremost, if you understand cryptocurrency or you've observed it, you've watched it from afar, you know that it can be highly volatile, right? So let's talk a little bit about, kind of back up a little bit and just talk a little bit about the history, right? Over the last 12 years, we've watched Bitcoin go to highs and then it drops and crashes for, sometimes periods of a year or 2 years, and then it goes to a new all-time high. And what happens is Bitcoin has this event called a halving event every 4 years. And every time that Bitcoin goes through a halving is simply where they take half of the tokens and coins and they send them to a burn wallet. They remove that supply, which ultimately does what? It helps to create value. Think about supply and demand for a moment. So whenever you have a high supply of something and a low demand, what typically happens to price? Price stays flat, or in many cases, it goes down. On the other hand, if you have a low supply and a high demand, what happens to price? Price tends to go up, right? Think about the real estate market over the last couple of years. You had a ton of people moving. There was low inventory. So what did that ultimately do to the price of the homes? Shot them up, right? To the point where the real estate market's overinflated right now, simply because there's still not a lot of inventory that's out there. So even with interest rates that are up, and you think that prices would be tumbling down, they're not, because there's just not a lot of inventory. So that's basic supply and demand economics. Now, let's talk a little bit about the cryptocurrency industry as a whole for a moment. So unfortunately, even though blockchain technology has changed the world and it's impacting almost all facets of business, digital currency as a whole is faster, it's cheaper, it's more efficient. It truly is the future in many different ways. 4% of the world now has a cryptocurrency wallet. That's projected to grow to 10% over the next few years. There have been challenges. There have been a lot of projects that really had no utility. There was no purpose whatsoever. There were projects that were literally launched as a joke that the online Reddit groups start getting involved. You get celebrities to start tweeting about it, and it starts to drive the value up and drive the value up and drive the value up. And then what happens? The major token holders sell, and what happens to the price of that token? It crashes, right? Because there's no true value. Think about it from this perspective. The dollar used to be backed by gold. And in 1971, it was removed from the gold standard by Richard Nixon. Unfortunately, what that did is it gave the Federal Reserve, which is not a government entity, it's a privately owned, group of individuals, that it gave them full control to be able to do whatever they want, print money whenever they want. Since that time, the value of the dollar has been ever declining. And here we are now in a new world economy that many of us have never lived through before. I mean, inflation rates that we've never seen before, many of us. We've got stock markets that are underperforming. You've got the real estate market that's overinflated, and our economy is limping along. And for the first time ever, we're watching many countries around the world flee the dollar. You have more and more people that are joining BRICS, and you've got all of these different people that are fleeing the dollar. Even our allies like Japan are moving away from the dollar and going in other places for energy. And so it's just an interesting time. And so that's why I always say, whenever you have new challenges, it requires new solutions. And anytime that there's a recession, it may be a good idea to think about diversification, right? I'm not one of these people that thinks the dollar is going to go away tomorrow, but I do think that the value of the dollar is going to continue to go down. I think we could even potentially see a reset. And I think that people are going to continue to struggle and suffer. And I think that it's wise to be able to start looking at other places of stored value, as well as new places for potential upside. And so with that, how are we different? Like, how is debt different than anybody else? You've heard us talk about how, we've got these different cryptocurrency tokens that are backed by oil or gold or natural gas or aluminum and a lot of these different projects. But what does that really mean? And this is what I want to break down for you. So you guys know me, I love my whiteboard, and I'm going to break this down for you. So First of all, debt is 15 years in the making. Debt did over $2.2 billion in revenue last year. So this is a monster company. Our projects employ over 10,000 people around the world. This is not something that is brand new as far as from an infrastructure standpoint. The digital currency side is relatively new. They launched it about a year and a half ago. The entire reason why they launched it was to bring true value, real world value into the cryptocurrency industry. There's a lot of people out there that are tired of the rug pulls. They're tired of the pump and dumps. They're tired of these projects that have zero utility, and they're tired of Bitcoin going to all-time highs, followed by a crash, and then sitting there for 2 years looking at Bitcoin going, do something. And the entire industry is waiting for Bitcoin to go through another halving, which happens every 4 years, before it goes to another all-time high. And then the rest of the industry follows. And there's a lot of people that stay on the sidelines of cryptocurrency because they think that it's too volatile. They don't like the highs and lows. Heaven forbid if you are, one of these people that buys when it's kind of on the way up and then it crashes and you're sitting there in a position where you need that money, you need the liquidity, you need the cash. And now Bitcoin's sitting down here at 16 and you're just sitting here going, I can't sell. I bought it at 45, right? And so that volatility is one of the key reasons that keeps people out of this industry, as well as a lot of these rug pulls, right? Projects that had no utility, no purpose, no value. They were built on hype, not substance. And so debt came out and said, listen, what if we were to take all of these different partners that we've already established, all of this infrastructure that we've already established, and we were to introduce a digital currency that was backed by commodities that are in high demand, things like oil, things like natural gas. That would help bring real world value to the table. Now that sounds great, right? You think, well, that sounds cool, but how does that really work? So this is what I'm going to explain to you. I'm going to break this down for you. So everything really started with debt, with our scan technology. We have satellites that are in space that have the ability to be able to scan the Earth and to be able to read frequencies and identify different elements that are in the ground that are on the periodic table, right? Gold puts off a different frequency than aluminum, than natural gas. And so we have the ability to be able to identify these different elements in the ground, but not just identify them. We have proprietary algorithms that allow us to be able to pinpoint these different commodities to the point where it's so precise that we can get to within a few feet of gold that is in the ground. And so this is highly valuable to exploratory companies, right? It makes them more efficient. It allows them to be able to know exactly where to extract. It allows them to be able to go in prior to even mining and be able to know exactly what's in the ground and to be able to get the money that they need to be able to go and drill. There's so many different things so much value that it provides that ultimately we have people that are lining up to be able to work with us. We started working with smaller entities. We're now at a point where we're working with large companies, governments like Ghana, governments, we're working with Dubai. We are at a point right now where we don't even have the bandwidth to be able to work with the amount of people that are coming to us. And so we're working on launching more satellites. So right up here is you have our scan tech, okay? Now, right below that, you have what we call our debt partners. Now, our debt partners are companies, and I'm going to give you an example. So this is black gold. Black gold represents oil. We have 17 oil wells that are online. We have 100 that are currently in underwriting as we speak. Some more exciting news is going to be coming out about this particular oil and natural gas in the very near future. And so how does this really back these tokens, first and foremost? And why do these partners, why are they willing to pay us a royalty? So we have a partner that's in Nebraska. Many of you may have seen on my site, I've been to Nebraska. I've stood on these oil rigs and wore my hard hat, and I've done lives from these particular locations. Why? Because I want people to see that it's real, to provide true validation. But why would they pay us a royalty? So this particular farmer who I've met with has a 5,000 acre farm in Nebraska. And for the last 10 years, he has been mining, or he's partnered with exploratory companies, and they've been drilling holes on his property, trying to find and locate the oil. And unfortunately, they came up dry every single time that they drilled a hole. And you can imagine the amount of money that would cost. So he called us and said, listen, can you help me locate the oil on our property? So we brought our satellite over, scanned his land, and we found 17 different targets. Started with the largest target. We told him that he would find oil right at 7,200, just below 7,200 feet. but there was a much larger chamber down below around 9,000 feet. And so they started drilling. He brought in a smaller well at first, started drilling down, and at 7,260 feet, he struck oil. Now you can imagine how excited he was. And at that point, the trust was established enough that he said, I'm going to bring in a much larger oil rig, and brought in one of the largest oil rigs in the country. And down below, we were picking up a much larger chamber that was just below 9,000 feet. And they started drilling, and he tapped into that chamber where he discovered 1,600 acres of oil and natural gas. To put this into perspective, the natural gas alone is worth $1.7 trillion in this one location. So do you think that this gentleman who owns this farm, 71-year-old guy who's been gobbling up this land for the last 30 years, he was a bus driver that literally little by little bought more and more and more of this land, that just struck both oil and natural gas, was happy to pay us a 5% royalty? You better believe it. So we have partners like that all over the world. So what we have are different projects that represent different tokens that are available. Token and coins are the same thing. A token just means that they operate on somebody else's blockchain. A coin means they have their own blockchain, right? Bitcoin has their own blockchain. Ethereum has their own blockchain. We operate on the Binance blockchain. Therefore, it's referred to as a token. So here's how it works. So we utilize our scan technology, and we have been able to establish different partners in the oil sector, the natural gas, aluminum, gold, high yielding agriculture, water, satellite technology, just to name a few. Okay, these are just some of our projects. What happens is the revenue that comes in from these partners goes into a trust. So each one of these particular projects has a trust that collects the revenue from our partners. Now, down here, you have a network of what's called node holders. Kind of a funny name, node. And all these nodes do, all these guys do, is these are the people that buy licenses, right? I'm a node collector. I buy licenses to be able to mine. So once I buy, and you can see they're all smiling because they're getting paid 24 hours a day, 7 days a week. They don't have to recruit anybody. They don't have to build a business. They don't have to be on auto ship, but they're getting paid 24 hours a day, 7 days a week. So they've got a smile on their face. So they're collecting these rewards all day long, every single day. They have a cool little app that shows you the rewards that are coming in real time, right before your eyes. So they're happy, right? So this makes up, whenever you buy a license, your node gets activated and you connect to this network. Okay, so you connect to this network. Now, what are these people doing? Why are they getting paid? I want you to imagine for a moment that you were one of the first people in the world to be able to go out when ATMs first came out, and you placed ATMs all over the country and eventually all around the world. And every time that somebody stuck a debit card into an ATM, they pay a transaction fee, right? Well, let's say that you got the transaction fee every single time that somebody transacted on one of your machines that you placed all around the world. Be pretty exciting, right? Well, that's exactly what mining is. See, mining, we use the term decentralized. What does that mean? It just means that we've removed the banks and the government out of the middle of the transactions. You know, they've mucked things up so much. Their fees are so high. They're so slow. They try to restrict you and tell you what to do with your money. They don't want you to withdraw your money. They don't even have your money. We operate in a fractional reserve banking system. If every one of us went to the bank today to withdraw our money, they don't even have it. Why? Because they've invested it. They're making money on your money. What we're teaching people to do is become the bank, take your money and go make money with your money instead of letting the bank make money with your money, right? Kind of makes sense. So if we remove the banks that were there to validate transactions, because that was part of their responsibility, right? When you swipe your debit card, you wait for an approval to come back. That's a third-party processor that's validating transaction. So all these nodes that are connected to the network, all they're doing is validating transactions all day long. They basically help reinforce the protocol of the blockchain. You don't have to do anything. I don't have to do anything. The software does it. And as a result, they get paid tokens in real time that come into their wallet. It is a decentralized wallet, which means that nobody has access to it but you. Now, you have these tokens. How are they backed by oil or natural gas or aluminum or gold? This is how we are different. There is not another cryptocurrency company out there, including Bitcoin, including Ethereum, or any other company in the world that does what I'm about to show you. So you collect these tokens. you can do several things with them. I can cash them in every single day. There's no restriction. They have 100% liquidity. Right down here, this represents the liquidity pools for each one of our projects. You can go look them up on the blockchain. You can see that there's money there. We've sold millions, tens of millions, hundreds of millions of licenses around the world, 60 plus countries. There's never been one person that has gone to cash in their tokens and couldn't liquidate and put it into their checking account within hours, maybe within minutes. So you can either cash in your tokens every day, or you can swap them. So I can take my NatG tokens and say, you know what, I want to get into this drip project that just launched. I like this project. So I can swap them in my app, and now I can get some drip tokens, or I can hold them for long-term upside potential. I am a long-term holder. I'm a long-term collector. Why? Because I understand the tokenomics. I understand supply and demand economics. And this is not get rich quick. This is not a get rich quick deal. This is about understanding how the supply and demand works, and more importantly, how the trust works. So I want you to follow me on this. So these guys here, they decide they want to sell for whatever reason. You know, maybe the token's up a little bit that day. Maybe they just need the money, right? One of the main reasons most people don't make money in cryptocurrency is because they buy and they sell, and they buy and they sell, because they buy, and then 3 months later, they need the money to go make their car payment, and then they sell. And sometimes they have to sell at a loss because the token's down in value, because they're waiting for Bitcoin to go through the next halving again. And then they buy and then they sell, right? They don't hold on to their tokens. You know, some of the best advice that I could give you, and here's my disclaimer, I'm not a financial advisor. These are my opinions, no guarantees on anything that I'm talking about today. There's risk involved in cryptocurrency, just like there's risk involved in anything that you do when it comes to markets. And obviously cryptocurrency is unregulated, so there's risk involved. So there's my disclaimer. But here's the thing. These people, they sell, and here's what happens. There's liquidity sitting in these liquidity pools, right? These are wallets that have money that are sitting in them that allow you to be able to cash out. So now those tokens go into circulation, right? They go into circulation. The trust has money that's sitting here, and the trust has one job. One job. It is to buy up as much of these tokens that are in supply as they can and send them to a burn wallet. Now, why would they do that? Why would they constantly want to just burn more tokens? It's supply and demand. If I've got a rising demand and a diminishing supply, based on simple economics, what does that do to value? Could it help reduce the volatility? That's the first question that I want to ask you. See, in traditional cryptocurrency, as we know it, including Bitcoin and other projects, again, we hit an all-time high. Bitcoin hit what, 69 at the last all-time high? People started selling. Selling what does what? It applies downward pressure to a token. Eventually it starts to cool off, eventually crashes and goes into a crypto winter, right? So now you have to wait for the next halving event. What's triggering the value to come back into a new all-time high? It's the fact that they're removing half of the tokens from the ecosystem. But what if there was a way, a company or a trust that literally their entire responsibility is to just buy up tokens? They do it every single day. Tokens that enter into the ecosystem, and they're trying to buy them at the lowest possible price point to burn as many tokens as they can. Could that help reduce volatility? Well, sure it could, right? Because now what you're doing is instead of waiting for that 4 years for the next halving, it's happening every single day. So now let's talk about what happens from here. So again, you sell your tokens. It's fully, the liquidity pools give you the money for your tokens. Those tokens come into the overall supply. The trust has money coming in on a regular basis from our partners. The trust comes down and gobbles up the supply, sends it to a burn wallet. And this is happening. Now, if I'm a short-term holder, well, let me back up. So first of all, there's not another cryptocurrency out there that has a trust that's there to help sustain the values, right? That's where we come up with the term stored value, right? We're providing the ability, through the trust, we're providing a way to be able to help reduce volatility with our tokens. Does it mean it won't fluctuate? No, things fluctuate. Whenever people sell, especially in a large amount, you're going to have downward pressure. And I'll give you an example. So we had a project called Bev that launched about 3 months ago. Bev killed it. Like the first 60 days before it actually hit pancake swap, there was so much activity and you could see kind of the value of what it was doing, and it was going up significantly. And so we have some people that are here that are more long-term holders, and we also have short-term holders that saw a little bit of profit there and they couldn't wait to get their hands on it. So the day that Bev hit pancake swap, within the first 10 minutes, we had about $10,000 worth of tokens that were sold. Within the first hour, $100,000. Within the first 8 hours, $1 million in tokens had been liquidated. So what's happening to that liquidity pool? It's draining, right? So where does the money come from to be able to fill that back up? The trust steps in, buys up these tokens, sends them to a burn wallet, and replenishes the supply of the liquidity pool to ensure that there's always money there for you to be able to liquidate if you need to. But here's what happened. Whenever you have massive sell-off in anything, it's going to, the prices, the values are going to go plummeting. It's the way that the markets work. So what happened was, is I started getting calls about 6 o'clock. This was Friday night, about 3-4 weeks ago. People were panicking. Oh my gosh, what's going on? Like, what happened to the value of BEV? It's crashing, right? Now, people that understand the tokenomics, they bought the dip, right? There's a saying, you always buy when there's blood in the streets. They bought the dip. You know why they did? Because they knew that the trust was going to step in and start gobbling up all of those tokens and send them to a burn wallet. And within 24 hours, the price rebounded. Any other cryptocurrency, that price would have not rebounded because they don't have a trust. Does that, hopefully that helps you understand why debt is so significant in the cryptocurrency industry. I always say that we're raising the bar in the cryptocurrency space. You know why? Because we're replacing speculation with tangibility. We're replacing hype with substance, right? Instead of hiring Kim Kardashian to go out and tweet about a coin that has no purpose, we're providing tremendous purpose and value by way of 15 years of infrastructure, by way of hundreds of different partners that we have and many different projects, through the royalties that comes in, that allows us to be able to continue to buy up tokens out of the ecosystem. Now, I said to you that I was going to say, well, how does short-term holders actually help the long-term holder? And why are dips good for the ecosystem? Here's why. Because all these people that were the short-term holders that sold right when that project launched, they drove the value down. But guess what? The trust was able to come in and buy up these tokens at the lowest price point and buy up a ton of them. So we were able to burn a ton of these tokens that went to a burn wallet. Some people panic sold because the price went down and they got, oh my gosh, I got to sell. So they sold and they didn't realize that the trust was going to step in and do its job, right? We always say, trust the trust. So now what happens? We've just burned these tokens. We want, it helps our ecosystem when there are people that are out there that are constantly selling. Now, it may be frustrating when people log in and like, gosh, the price of the token's down today. I don't care about price today because I'm looking at this as a 3 to 5 year wealth creation plan. This is my 3 to 5 year retirement plan. Beats the 40-year plan. This is my 3 to 5 year plan. I don't care about price today. You know what I care about? How many tokens that I can accumulate. How many tokens I can get my hands on right now. Why? Because I know there's going to be all these short-term holders that sell. I know the trust is going to keep diminishing the supply. I know every year we have a halving. In our newer projects, we have a halving now every quarter. So it's quarterly quartering, we call it. And I know 1 year, 2 years, 3 years down the road, as that supply continues to diminish and I'm sitting there holding those tokens, I shouldn't say I know, I believe that I'm going to be sitting in a very, very good position. I have 75 million NatG tokens, 75, maybe 80 now. Well, we launched at 5 zeros and a 1. We're at 3 zeros and a 1 today. I believe that that could hit a penny inside of the next 12 months. May not sound like a lot, but when you have 75 million of them, it is. I believe that it could hit 5 to 10 cents in the next 3 to 5 years. Now, can I guarantee that? No, this is just my opinion. So for me, I'm just a long-term collector and I let and watch all the short-term people come in and out, and we're happy when they sell. I'm happy when the prices dip because why? The trust is just able to burn more of this. And as it burns more and more of this, those tokens potentially go up in value over time. So that's why when we say that we have asset-backed projects There's nobody else out there in the entire world in the cryptocurrency space that is doing what we are doing. I believe, mouth is so dry today. I believe that, so the cryptocurrency industry as a whole, 4% of the population currently has a wallet. It's projected to grow to 10% over the next couple of years. I believe the catalyst that's going to grow that from 4% to 10% is going to be exactly what we're talking about here, asset-backed crypto. It's replacing hype and speculation with substance and tangibility. It's going from a dollar that has no value because they just keep printing it back to the gold standard where they can't print a dollar unless it's backed by gold, right? Same concept. And that's what we've introduced inside the digital currency space. You know what that does? It provides three things that everybody wants in a downward economy. Number one, they want stored value. Do you get stored value when you put your money in the bank right now? Heck no. If you're not making at least 8, 9% on your money right now, you're losing money because of inflation. Your dollar isn't going as far because you're paying $5 for gas and $10 for a dozen eggs in some cases. So stored value. Now, some people say, well, I'm going to go buy silver and gold. You know what? I do the same thing. I collect silver and gold. But guess what? This doesn't give me liquidity. I could go cash it in if I needed it, but it's not, it's not I can't go cash it in within minutes the way I can with digital currency. And most importantly, what it doesn't do is it doesn't give me a tremendous upside potential. Doesn't mean that silver can go up in value. Yes, it can. Gold can go up in value too. But I'm looking for tremendous upside potential. And I believe that I can find it in the digital currency space because of the trends and where digital currency is going by aligning myself with the first company in the world that introduces asset-backed digital currency. So for me, I'm buying the value, not the price. It'll take some time for the price to catch up. That's the tokenomics. That's the trust eliminating the supply over time. That's all these short-term holders coming in and selling, driving the price down, people stepping in, buying it up. That'll all work itself out. I'm just going to hold on. And that is my wealth creation plan. So that's how we're different. And that's why short-term holders actually help our ecosystem. And that's why dips are healthy for our ecosystem, right? Because those dips are allowing the trust to be able to come in and burn a ton of tokens. Now, if you were to look at my back office, and I'll show you guys just kind of a glimpse of this, if I see if I have it up here. Might take me just a second. Oh, I do. Cool. Okay, so if I were to show you my software, see, we have the coolest thing in the world. We have software and an app. Like I have an app that pays me 24 hours a day, 7 days a week. I don't have to do anything. I don't have to recruit anybody. I don't have to build a team. I don't have to be on an auto ship. And I get paid all day, every single day. Like who wouldn't want an app like that, right? So when I log into my app, you can see real time exactly what's happening with tokens. They're going up, they go down. You'll see those fluctuations. Some of them are up, some of them are down. They were, the NatG was up early this morning. People sell off. Those short-term holders sell off. It starts to come back down a little bit. So you see fluctuation. Then you come over to the rewards and you see the different licenses. So this is my account. So we have my account, my wife's account. So we have probably 50 licenses here. So if I were to click on NatG, you can see in real time, once that stops spinning, that these tokens are coming in right before your eyes. They're being deposited into my account. Now, this is about 17 million tokens sitting here. But if I were to withdraw this from the piggy bank and it goes into my decentralized wallet, you would see another 62 million sitting here. Now, I don't care again about the price today. What I care about is how many of those that I accumulate, because if we've already burned, well, we're at 0.0002. And if you were on the app, you'd see right now that NatG's up about, I think it's about 95, 100% this week. Is that about right? So you would see that this project's starting to gain momentum. Why? Well, because the burns are starting to come in. And let me show you this. So if you come down here to news, you'll see that there was a burn notice that just came out 5 days ago. We burned 34 billion, 800 million NatG tokens last month. That was the trust. This can be validated by going to the blockchain, and you can literally find the wallet that's buying these tokens up all day long. So you can see that tokens are being burned on a regular basis. So if I'm holding, I kind of want to be the last man standing. I mean, I use that loosely because, but the idea is that as all these people come and go, and the values go up and down, but the volatility is reduced. We're not seeing these crazy crashes where we have to wait for 2 years because we have a trust there to help support the value. supported by the royalty income from gold or oil or natural gas, that makes people feel more comfortable. But for me, I just want to accumulate and accumulate and accumulate. And you can come in and this is, I don't have to do anything. It's just happening all by itself. So that kind of gives you just a kind of a quick glance of how the ecosystem works. Now, we just came out with a product. We came out with a product that is supported by water. And I first heard about this project when I flew to Utah, when I was looking at the company, and I met with the owners of DET. And they had just told me about one of the largest underground aqueduct bodies of water that had been discovered in the last 50 years was found because of our technology. So they started telling me about the possibility of a token, a project that was going to be launched supported by water. Now, that means many different things. First and foremost, we're talking about bottled water, sparkling water. You know, the water industry is a booming industry. It's a $342 billion industry, and it's projected to grow at 5% every single year over the next few years. Why? Because people are becoming more health conscious. We also work with our DET partners to drill wells in third world countries where they don't have running water. You know, they say that future wars will be fought over water. And so we have this project that we introduced, I think it's actually been 2 weeks, about 2 weeks ago. And in that period of time, it has just absolutely exploded. To me, it's been one of the projects that I was looking forward to the most. I'm going to pull up my app here so you can see. Okay, so NatG, by the way, just if you want to see right here, is up 84% this week. Past performance doesn't guarantee future results, but you can see that as those burns start kicking in and the tokenomics start kicking in, and it's 9 months old. We haven't even gone through our first annual halving yet. But if I were to go into drip, you can see I started mining, it'll be 2 weeks ago on Thursday. So I've been mining since, 10 days now? And in that time, I've been able to accumulate, well, I can actually show you this. So go into my rewards and let's go to drip. Okay, so started mining on Thursday of be 2 weeks this coming Thursday. So is that about 13 days? I don't even know what today is, Tuesday, so 12 days. So you can see I've mined about 6,536 tokens valued at $1,732. So hey, not bad, right? $1,732 in a matter of 8 days or 12 days, whatever it is. And you can see I mined $56 yesterday with that one license. So you can kind of get an idea of what it's doing. We've sold 17,000 of these licenses in under 2 weeks, which is unheard of. Now, the reason why has to do with the tokenomics. They did something really, really cool with this project. And I'm going to pull up the light papers so you can see exactly what I am talking about and why I believe that this is such a great buy right now. Such a great buy. So I'm going to go to the debtbox.com. The debtbox.com allows you to be able to go and you can read all about our different projects, the light papers on the projects. You can scroll down here to the bottom, see our different projects that we have, click learn more, and here's our light papers. So you scroll down and there's, BEV, real estate, drip. So if I open up the light papers here, you can see that this particular project has a pricing schedule. It's a little bit unique. The first 1,000 licenses started out at $7,500 per license. Once those sold, then the price went down to $7,000 for the next 1,000 licenses. Now, why would that be? Here's why. Because, and I'll come back to this in a moment, if I'm one of the first 1,000 people on this network, the rewards that are being paid out are being divided among the first 100, 200, 300, 400, 500. So the amount of token distribution is much higher. It pays to be early on in a project because there's less people that are part of the network, which means that there's less people sharing those rewards, which means you can mass accumulate a large amount of tokens. Now, if I'm a long-term holder and those tokens go up in value and I'm sitting on thousands of these tokens, that's a big deal, right? That's a huge deal. So some people see value in that. Some people, maybe they want to wait. And so and maybe they weren't in a position where they were able to go afford this type of license at this price point, right? So Then we went to 2,000, 1,000 to 2,007. So you can see, I mentioned that we've sold to date 17,000 licenses. So we're at $3,000 per license. Is that right? And IX Global, we had 2,500 or 3,000, Tony. I think we're at 2,500 right now because you get a discount going through IX Global. I have to double check that in my back office. This is so IX Global is the wholesaler for DebtBox. You typically get a little bit better deal when you buy through IX Global. So you can see that the price points start to go down. Now, somebody might have paid, you might say, well, I was the 16,999th license yesterday, and I paid $500 more. And now it's $500 less. That's okay, because you know what? You're going to be online a day or two before somebody else, which means you're going to accumulate those tokens a day or two before. Now, you may not think that that's a lot, but guys, I just showed you that I've generated almost $2,000 in revenue with this license in less than 2 weeks. And that's based on today's values on a project that's only a few weeks old. Now go out a year and 2 years and 3 years. If you're thinking long-term, that could be, one Bitcoin's worth $69,000. So some people see the value in that, some people don't. So why do I think that the price point is a great buy right now? For this reason, we're less than 2 weeks old, which means that we haven't really even gone through, in the first year, there's a total of 750 million tokens that are going to be paid out. Let me show you the distribution schedule here. So hang on one second here. Here it is. So you can see in the first year alone, 750 million tokens will be paid out in the first year to these node holders, shared proportionately based on however many nodes that you own. Some people might get more, but it's always equal. It's always proportionate, right? If everybody had one license, they'd all get paid the same amount of tokens every single day. But here's the thing. With this project, they did something unique. They said in the first 60 days, they're going to pay out all 750 million of those tokens. And they're going to have a halving at the end of June, which means that there's a lot of token that's going into circulation in a very short period of time. And the people that are involved in mining now at this stage get to share in that. So why did I buy a license and one of the first 1,000 to buy one? Because I saw the value in getting online as soon as I could to accumulate these tokens. Why? Because I believe that water is going to continue to be more and more scarce. I think that this license has huge upside potential. And so I wanted to get my hands on this. I've wanted to get my hands on it since I first heard about it. But here's the thing. I had no idea that it would take less than 2 weeks and we'd have already been at this price point of $2,500 per license. That means that we've literally only I've only gotten through 9 days of token distribution, and somebody can come in and buy a license now for $2,500 per license. And I'm going to get clarity on that. So I'm going to make sure so this is, hey, Troy, my buddy Troy Dooley's watching. I love Troy. So that gives you kind of an idea of the overall potential with this particular license. Now, once again, I want to be very, very clear. We don't sell cryptocurrency. We sell software. I don't offer any guarantees. There's no 2%, 3%, 4% a week. If you ever have somebody that says, hey, we can guarantee you 4% a week, run, because they can't do that. It's illegal. There's risk involved. I can't guarantee you that these tokens are going to be worth more or not. It's up to you to decide, do you believe in the tokenomics and ultimately what we're doing and the purpose of what we're doing, right? The utility of what we're bringing into the industry. Do you see value, especially on a long-term basis, as we continue to remove more and more of these tokens from the ecosystem? That's up for you to decide. So there is risk involved. At the end of the day, we sell software that allows you, the only thing I can guarantee is you're gonna have more tokens tomorrow than you do today. Everything else is based on tokenomics, supply and demand, people buying, people selling, and whether or not you believe in the utility behind what debt is bringing to the table. So I believe that this is a great opportunity simply because somebody can come in here less than 2 weeks after the license launched and pay $2,500 for a license today. And that is a phenomenal opportunity with this particular license, simply because 750 million tokens are going to be distributed over the course of between now and the end of June, and you can be up and mining within a couple of days. So that's why I think that this is such a great buy right now. Now, you could say, well, I want to wait until it goes down a little bit more, right? I see the price here. Why wouldn't I wait down until it gets down to 500? I believe that we'll be at these price points for a little while now. And by the time we get down to the $500 price point, I believe that we will have seen a large majority of that first year token payout. And so for me, I think that you're kind of in that happy medium where you're still going to get the benefits of being early into the project, and you still have a lot of token distribution ahead of you. And by the way, it's not over at year one, right? I mean, you still have, you continue to see the token distribution as we continue to move forward. Now, again, why do I say that I'm a 3 to 5 year holder? Because in that 3 to 5 year period, I want you to look at the token distribution, how many tokens are entering into the ecosystem. There's something magical that happens when the trust is buying up more tokens that are being produced. Now you have a diminishing supply, and that is where the greatest potential is. So when I say this is not get rich quick, I mean it. I'm looking at this as a 3 to 5 year wealth creation plan that, based on the fact that I believe, my opinion, that these tokens and this ecosystem brings a tremendous amount of value to the cryptocurrency space because they're raising the bar in the industry. We're moving away from hype to substance. We're moving away from speculation, and we're moving into tangibility. Where's that tangibility coming from? It's coming from the royalty revenue that comes in from all of our different partners, which goes into a trust, which ultimately is continually buying up supply. Here's the best part. All of this has 100% transparency. You can go look up these trusts on the blockchain. You can look at these purchases that are happening all day long. You can look up your nodes online. You can see your node online, purchased all day long. You can go look up these liquidity pools on the blockchain, and you can see that the money is there. We are listed on 7 different exchanges, including 2 of the top 15 exchanges in the world. And we are moving towards Binance, which is the #1 exchange this year. So all of this has 100% transparency, which we haven't seen before in this space. So for me, that's why I'm excited about this ecosystem. That's why I'm excited about being a collector of these licenses, because right now, if not this, then what? You leave your money sitting in a bank, put it in the stock market where they continue to see the stock market going down. Real estate's overinflated. I believe this is a new world economy that we live in. And if we fail to adapt and we fail to innovate, we're going to continue to see people struggling and suffering. These are new problems. And in my opinion, old ways won't open new doors. They require us to start opening our minds up to new possibilities and new ideas. And I believe that digital currency is the future. And I believe with those trends, there's a tremendous amount of money that can be made. And I'm going to go back to the same philosophy that I've shared for many, many years. I said this in 2017 or 18. When Bitcoin went from $19 to $3,000 and Ethereum lost 94% of its value, this is what I said. The decisions that you make in a down market and the tokens and coins that you accumulate at that same time can build you true wealth over the next 3 to 5 years. It's about accumulation. Why? Because in a down market, you have price and you have value. I don't look at price. I'm not buying price. I'm buying value. Of course, I want to get the lowest possible price that I can. But for me, it's about dollar cost averaging. It's about just receiving a little bit of tokens every single day into my wallet and holding on to them over a period of time, allowing the trust to do their job because I trust the trust. I understand supply and demand economics. And I also understand that we're in a bear market, and Bitcoin is projected to go through its next halving early next year, which historically speaking has always triggered a new all-time high for Bitcoin and a new bull run for the rest of the industry. So that is why I'm excited about what we're working on. Hopefully that gives some insight into the projects. Started this off, we were going to go live in our own private debt info group, and somehow I missed that and ended up on my own private wall. And so hopefully those of you that have been kind of paying attention from the outside, watching what we've been doing, this gave you a little bit of a visual of how this works and why this is so different than anything that's out there inside of the cryptocurrency space. So with that, thanks for watching, you guys. Appreciate the interaction. Feel free to tag somebody below if you have any questions about what we're working on. I'm here. Feel free to reach out, and we'll see you guys again soon. Take care.